The E-mini opened in yesterday's trading range, Friday's trading range, instead of gapping up to a new high. And therefore the bulls are not quite as strong as they could have been. This was, well, the entire day Friday was climactic, but especially the second half. And the bottom of the buy climax is here. Theoretically, some bulls put their stop right below the bottom of the most recent significant low, and that would be the 44 low. And when a buy climax ends, the bottom of the most recent buy climax is always a target. So that 44 low is a magnet today. Normally a buy climax at some point ends and the market evolves into a trading range. That is the target below today. Now, Friday was a buy climax, and the day after a buy climax has a 75% chance of at least a couple hours of sideways to down trading starting by the end of the second hour. Sometimes it can start on the first bar. And you probably saw on the first bar, it immediately rallied in the first few seconds, and then it also immediately reversed down, outside down. So the bulls were unable to get above yesterday's high, and now they're going the other way. First target is here. In general, first bar of the day, 20% chance high or low of the day. The bigger this bar is, the more it closes on its low. The more this is maybe 25% chance it's the high of the day. The day after a day with a big range often overlaps the big range day a lot. In other words, you get a sideways day, and also you often get an inside day. An inside day means the high of the day below yesterday's high, the low of the day above yesterday's low. So whenever I see a big day closing on its high like this but not gapping up, I think that we're not getting strong follow-through, and therefore today might largely overlap yesterday. Yesterday, when I say yesterday, I mean the bars to the left of this line. I say that because, if I scroll ahead or scroll back, I don't want to be trying to figure out, is this a Monday and is that a Friday? To me, this is today, that's yesterday, and I don't care if that's a Friday. So that's why on Monday, I refer to the bars to the left, Friday, as yesterday. As for trading days, it is yesterday. For calendar days, it's not. It's just easier for me to think of whatever's to the right of the line as today and the left as yesterday. We were in a trading range for the final hour yesterday, and we're probably in a trading range all here. You can call this a spike pullback in a very tight channel. You can call it a buy climax. Whatever you call it, there are a lot of theoretical bulls with exits below that price, so there's a big magnet there. What happens if we rally for the first hour? We could rally for an hour or two, but 75% chance we're going to be sideways for at least a couple hours, sideways to down. Globex chart, fairly tight range, very strong bull trend, so bull flag. Chances are ultimately we'll go higher, but we could go a lot lower first. It looks like this might be the end of the bull flag, a double bottom, but a lot of times you'll get a lower high and then another leg down. Globex range relatively small, so we might break out of both the top and the bottom of the range. Outside down bar 1, but prominent tail, top and bottom, sideways for 15 bars. So when you look at it, you don't say, wow, this is going down, or oh boy, this is going up. You look at it and say, it went up, it went down, it went down, it went up. I don't know what it's going to do. And that is the correct assessment right now. The market's deciding, are we going to break out above yesterday's high, make a new all-time high? Are we going to continue up to the targets above? We have several targets. The most obvious one on the weekly chart is the top of the channel. And then beyond that, we have a measured move up based upon the pandemic crash. So right now it corresponds to around the top of the channel, but the channel is going up. And if we take a month or so to get there, the top of the channel will be above that measured move. Daily chart, here's the top of the channel. We tried to sell off here, and then we tried to get a double top here. Instead of going down, we went up. So that measured move is a target. It's basically the top of a 3-month trading range. And we're fairly close to it. So that's the next target there. We don't have to reach any of those targets, the channel, the measured move here, the measured move on the weekly chart. You know, we could turn down before we get there. On bar 1, we went up, we went down, and now on 2, we're going up again, trying to break to a new all-time high, and trying to get above the Globex high. Globex high just below 43.66, so it's just above Friday's high. This is trading range behavior. Besides being sideways, the market is forcing bulls to buy at the top of a very big bar, risking 10 points. So if you buy above 2, your stop is here. You're risking a lot, so you need a lot of reward. It's unlikely that you'll make twice your risk, 20 points. If we go above Friday's high, we'll probably stall, top of a trading range. If we reverse, then an expanding triangle, up and down and up and down and up and down and up, and then the bears will try to get down. There's also a bigger expanding triangle on the 60-minute chart. Big reversals, legs getting bigger. So the bears want a reversal down from around the top of the channel. It could be 10 or 20 points higher before we reverse. And the bulls want the market to just go up to the target above, the 4,400 big round number, and that measured move at 44.04. This is just deadly for stop entry traders, buying above 1, buying above 2, buying above 1, buying above 81 on Friday. So very big bars, so very big risk. Sideways for so low probability. It's a limit order market. Most traders should wait. Traders should wait for a stop order market. They should wait for a setup where they can enter with a stop and have a reasonable chance of getting a swing trade. A swing trade means 10 or more bars, an hour or two, and having at least a couple legs, and having a reasonable chance of making at least twice their actual risk. If the actual risk is very small, then twice their initial risk. If the initial risk is also small, then you don't think in terms of twice your risk. You just think of 2 legs, 10 bars, and some minimum profit target. When the bars are small, 4 points. When the bars and legs are big, then maybe 10 points. Bear bar, bar 1, so probably sellers above. Bull bar, bar 2. The bears see a double top 77 and 2, but a bull bar in the bottom of a developing trading range, so not a very good sell. Bears are hoping that it's this big buy climax, and then the next day, the first bar became the high of the day, a bear bar, and we got a bear trend. So very strong bull trend. On the open, tried to go above that high. Instead, we reversed. Very strong bull trend. Tried to go above that high. And here it's a 2-bar reversal. So up on 2, down on 3. But similar to last week over here. Very strong bull trend. Instead of forming a trading range here, spike pullback channel. Instead of stopping there and forming a trading range, we just sold off to below the bottom of the buy climax. Three bear bars right on the open. So sustained selling right from the very first bar. Here we have bear, bull, bear. So not sustained selling. This is unusual. Very strong bull day, very strong bear day. It's more common to get a very strong bull day, very strong bull day, and then a trading range. So this is probably going to lead to an early trading range because that's what is more common. So the bulls, a micro double bottom, 1-3. Good for the bulls, but very big bars, so big risk, and a tight trading range now for about 20 bars, so low probability. Possible low of the day, but I think it's probably better to wait to see if we get one more big bull bar. Buying at the top of a trading range, a relatively tight trading range, is a lower probability thing to do. We got the Globex high just a little bit above on the 15-minute Globex chart, outside up bar in a bull trend. Chances are we're going to go up there. But big tail, lower probability, big bar, big risk. So it's not a strong buy. Also, we know 75% chance we're going to be in a trading range lasting at least a couple hours. A trading range or a bear trend lasting at least a couple of hours, starting by the end of the second hour. So it could be underway right now. Can you sell below 4? Double top 2? I don't think so. And I also think it's probably not worth buying above 3. So I think it's better to wait. Are we always in long or short? We never were always in short at any point Friday. We were always in long, right from the beginning, bar 1, bar 2, bar 3. And it never did enough to get always in short. Barely got below the moving average here. So we're still always in long from Friday, but now we're sideways. What do the bulls do if they bought above 3? Well, their stop is at least below 3 or below 1. I think it's better to be flat. We have a micro double bottom, 1-3. Bears are trying to get a micro double top, 2-4. Can you sell below 4? After 2 decent-sized bull bars, both closing above the moving average, I think there's nothing 4 can do that would make me sell below. Always in long, but not bullish enough for me to buy, so I'm currently flat. A lot of time left in the day. We got 77 bars remaining, so you don't have to rush out. One of the mistakes a lot of traders make is they're so eager, desperate to make money and they know the easiest money of the day is in the first couple of hours, and they end up grabbing early trades that just are not quite good enough because they're afraid of missing out on a great opportunity. And I think it's better just to patiently wait until something is clear. And sometimes entering late, sometimes that means entering late, 5 or 10 bars after a trend begins. However, it's easier to make money when the market is trending or clearly trending. This is trending. We have 3 consecutive bull bars, but it's not. We're still in a trading range. We're at the top of a trading range. Do I think we're going to break out above Friday's high? Sure. Right. The Globex high is above Friday's high, so we should get there. We're in a reasonably strong trend on the Globex, in the Globex market, and we're closer to the Globex high than to the Globex low. And we know there's a 90% chance we either go above that or below this. So it's more likely we're going above that. We're trending up, and we're a lot closer to that. If we reverse down for a couple of bars, then it becomes more likely that we'll go here. But right now, it's more likely that we go there, at least 1 tick above that, which means we have to go above the Globex high, which is a little bit below that. Excuse me, we have to go above Friday's high, which is right here. As a general rule, when I'm in the open looking for direction, I want to see consecutive trend bars. Let's talk about the bull case. I want to see 2 bull bars, one closing on its high and having a big bull body. And we have 2 bull bars, 2, 3. Bar 3 closes on its high, but the body is not all that big. So that's not enough to get me to buy above it. And for the bears, I want to see consecutive bear bars, one closing on or near its low, in this case, bar 1. And then I think we're probably going at least a little bit lower. To me, that becomes a good candidate for the start of a swing down. Bulls, couple bull bars here, both closing on their highs, decent sized body, closed far above the moving average. So I would start buying there or here. If you do buy here, there's still plenty of room left. Plenty of, if it's trending up, it could go a lot higher. So it doesn't matter if you buy there, here, or here. There's still a lot of profit potential. Still on the buy above 3, breaking above the Friday's high, should go at least a little higher, could go a lot higher. Bulls, they can always use a tighter stop, a point or 2 below a bull bar, a tick below a bear bar. You can see we're just below the Globex high. Sometimes it'll go right up to the Globex high, touch the Globex high, reverse down without going above the Globex high. Usually, if it gets this close to the Globex high, we're going above it. Nobody willing to sell low. You'll have bear scalpers selling high, the close of 6, the high of 6, but they're scalping. They get out with a point or 2. Nobody at the moment willing to sell below bars. We just went above the Globex high, and the market's deciding, are we simply going to test it and reverse down, or are we going to break above it? A lot of overlap. Bars overlapping the prior bar or bars. That lowers the probability of a big bull trend. We could get a big bull breakout at any point, and we've had a lot of strong trending up over the past few weeks. No matter what we do, even if we go up for another hour or so, we still have a 75% chance of at least a couple hours of sideways to down trading today, starting by the end of the second hour. Still more buyers than sellers, not strongly bullish because of all the overlap. That means when we have overlapping bars like 6, 7, that means 7 sold off a lot from the top of 6. And that's not what you want to see in strong trends. In strong trends, you want to see yesterday 22, 23, 24, 25. Not a lot of overlap. You don't want to see the bar open and sell off. You want to see the bar open and go up. This can convert into a strong trend. It's pretty common for a weak bull trend to become a strong bull trend. But it also can reverse. We have an expanding triangle. I don't have it drawn in, but this is a possible expanding triangle top. What's most likely? Higher. Always in long, mostly bull bars today, but relatively bigger risk. The bars are big and relatively lower probability, but the probability still favors higher prices. I call this an expanding triangle, and on the 60-minute chart, there's an expanding triangle over the past week. So it's a nested expanding triangle. On the 5-minute chart, the expanding triangle is right here, the past 2 bars, and it's nested within a bigger expanding triangle. Bulls are trying to get the breakout and measure move up, and the bears are hoping for the reversal. Less overlap, 8, 7. 6 closed on its high, 7 closed on its high. 3, 4 close on or near their highs. So traders are buying into the close of bars, which is bullish. That means it increases the chances that we'll go higher. If you're buying here, traders, they can buy at the market. They can buy with a stop above the high of the prior bar. They can buy at the market as soon as a bar closes. They can buy with a limit order as soon as the bar opens, trying to get in at the close of the prior bar. I would get out, as I said, a point or 2 below a bull bar and a tick below a bear bar closing below its midpoint. And I say that on the open, anytime you're in a buy the close trend, it's usually good to have a fairly tight stop. But on the open, no matter how strong a move is, 50% chance it's just a test of support or resistance, and it will reverse. Can you sell below 9? Nested expanding triangle. Well, it's a 7-bar bull microchannel. So since bar 3, every low at or above the low of the prior bar, and that's a lot of bars where traders have been buying sell-offs. To sell below 9, you're betting that traders will not buy this sell-off, even though they bought the past 7. So it's, I think, better not to short below 9. Wait for a second reversal down. You can say it's a second reversal down, bar 2, bar 9, but right now, 7-bar bull microchannel, probably buyers below 9. I would not take the short. Any reversal from a new high is a possible high of the day. Nested expanding triangle, good for the bears. Reversal down from above the Globex high and yesterday's high, good for the bears. But 7-bar bull microchannel, probably buyers not too far below 9. So it's, I think, better not to short below 9. Okay to exit long. Low a bear bar closing below its midpoint. But I think the probability is not high enough for the bears, despite the nested expanding triangle. Nobody is eager to sell below a bear doji in a bull microchannel. So not a very reliable candidate for the start of a swing down. Reasonable to get out of longs below a bear bar. This is not a bear bar closing below its midpoint, so some bulls will get out a point or 2 below 9. We're getting late in the first hour. Traders are starting to think about what the first hour will look like. The last hour was a small doji bar. This hour has a tail below, and you got to be wondering, are we going to get a tail on the top of the bar? And will the hour close above the high of the last hour? Will bar 12 close above bar 77? The bulls want the hour to close above the high of the prior hour, which is bar 77. the bears want weakness, and therefore they want a tail on the top of the bar on the 60-minute chart. Here's the 60-minute chart. Bulls want the hour to close on its high and above the high of the last hour. And the bears want a tail on top and a close below the high of the last hour. Is it still by the close 9? I'm currently flat. We're obviously in a bull trend, but I don't like all the overlap. I don't like the prominent tails. For the bulls, it's a high 1 above 9, but it's a bear doji following another doji, and every bar today has had at least one prominent tail, except bar 6. Every tail means the market went one way and then the other way. So that means for most of the day, we've been having small reversals. And when that's the case, I don't want to be buying at the top of anything. Bar 12 often reverses direction to change the appearance of the 60-minute bar. Right now, the 60-minute bar is strongly bullish outside of closing in its high. But we still have 10 minutes remaining in the hour. It could look different when it closes. Bar 12, if you're in a strong bull trend, bar 12 often is a bear bar. If you're in a strong bear trend, bar 12 often is a bull bar. And that's true for every multiple of 12, right before the hour closes, bar 12, 24, 36. The same is true if you look at a 1-minute chart. Every multiple of 5 tends to be important. So there's an increased chance of a strong trend bar up or down every multiple of 5 on the 1-minute chart, altering the appearance of the bar on the 5-minute chart. You can see the tail on the bottom of 7, and that means the market went down and then it went up. But very often it goes up in the final minute. So that bar closes 7:05. Let's look at a 1-minute chart and see what happened at 7:05. Here's 7:05, a bull bar. Not a dramatic bar, but still a bull bar after a bear bar. 9 bar bull microchannel. 9 bar every low at or above the low of the prior bar. So anytime it goes down, bulls are buying. So if it goes down on 11, can you sell below 11? Why? The past 9 bars, every time it went down, the bulls bought. So do you want to sell 11 near its low? It's a low probability bet. Even though that blue line, the high of yesterday, is an important price for the next 10 minutes, next 7 minutes. That's the high of the last hour. And right now, the 60-minute bar is well above that high. But there's still time left. And we could get back down to that high or below that high, which means bar 12 could still close below that blue line. Is that enough of a reason to sell below 11? I would not. Just because 12 might close below the blue line doesn't mean 13, 14, 15 are going to be down here. When you have this many bars without a pullback, chances are traders will buy the first pullback. I talked about that on the daily chart. We had 11 bars without a pullback, and I said traders would buy the first time a bar goes below the low of the prior bar, like that. Here we had, I think, 12 or 13 bars without a pullback. So they'll buy at or below the low of the prior bar. So they bought the pullback here. So they'll buy at or below the low of the prior bar. So they bought the pullback here. Nested expanding triangle, 5-minute expanding triangle top, nested within a 60-minute expanding triangle, but 9 bar bull microchannel